Welcome to this week's Cattle Call. I'm Susan Littlefield on the World Radio Network. Just like the Kansas City Chiefs and, of course, our favorite Minnesota Vikings, on fire. Yep, I see your cup. And that is what we are seeing within this cattle complex this week. We're going to talk about what was on a Wednesday, kind of the surge that we saw within the trade. We'll also talk about where we're at with boxes, where we're at with charts. There's a lot to look at as Brad Kooima joins us. He is with Kooima and Varilek out of Sioux Center, Iowa. So, what was the reason we saw a surge on a Wednesday trade?
First of all, thanks for having me on, and how astute of you to pick a sharply higher day that we can do this. Maybe we should do it every day, and every day the market be sharply higher. You suppose?
That works for me.
Yeah, unlikely. Yeah, I might have to trade futures a little bit once in a while, but
yeah.
So obviously the framework had been, the groundwork had been done here. We saw an improving cash market last week. We're around here. We traded cattle at 187 last week, 2 to 3 higher. The South was 185, also 2 to 3 higher. So we come in this week with a little bounce in our step. Show list pretty manageable in the North, very much so in Iowa. As I continue to say over and over to anybody that'll listen, we do not have a big supply of cattle, and what we have is not very fat at all. We are very current here. The weight problem is Texas and Kansas, not in the North. And I really believe that as the North goes, so goes the market. So, but to answer your question, finally, I thought, we were a little better early, but then when, believe it or not, on a Wednesday, that's the day when this Fed cattle exchange, does anybody remember that? It was touted as a big deal a few years ago when it started, and it's kind of drifted into oblivion. But they had a couple of pens of cattle in Texas today on that video auction bring 186. And last week, like I said, they had 185. And then there was a pen that brought 188.50 on a grid-based bid. And I really think that that's what the market responded to. The bids are, I can get a fully steady bid here. We decided to pass for now. I think we're going to get a couple higher here for cash cattle. And the irony strikes me. How about that? Transparent price discovery. Isn't that something? What a novel idea that we could actually, find out what cash cattle are worth in Texas for a change.
So having said that, that kind of sets the tone for what we're going to see the rest of the week. Can this momentum continue, and will we see cash kind of hold out till Friday?
I kind of hope so, because most weeks, Susan, when we wait and get dug in the last 3 weeks, the Packers come to us. So asking prices around here around 190. I don't know if we'll get that. I think there's actually a 50-50, 60-40 shot that we get that on the good kind of cattle. Certainly the feedlot manager's got to have a little confidence here with futures up $2.75. He's got to have a little arch in his step, I would think. So next week we start with delivery, but as long as the cash market keeps charging like this, we shouldn't have to worry about it. We do have about as par a basis going into deliveries we've had maybe all year this year, though, with futures at 187.25. It is what it is. I think that the futures market's finally responding to the reality that numbers are tight. You're seeing some of that surfacing with Packers having tighter kills. One Packer particularly, he's went to 32 hours for a couple of plants. Both of those plants are in the deep South, which is also kind of telling that seems to be where the tighter supply is, which is good. So yeah, it's fun to talk markets on a day like today. Some of the stuff might be some macro stuff too. Maybe we should touch that if you want to anyway.
Before we get to the macros, and I'm making myself a note to come back to that, I wanted to talk about, I had read early on a Wednesday morning, and I know I mentioned it yesterday too, that there wasn't a lot of deferred purchases last week for these cattle. So that's got to be another advantage for that producer.
We've gone through a slight uptick last week, but that would have been the third week in a row that marked a noticeable decline in the 15 to 30 day window. And I always think that, of course, I'm a negotiated cash trade guy. If people don't know that by now, then they haven't been paying attention. I'm anti-formula and whatever, do your own deal, but we make sure we got enough cattle that trade cash cattle that we know what the market is. So I think, whenever you give days, whenever you give away inventory, clearly that allows the packer to have more inventory and more leverage. So two go hand in hand. 3 weeks ago when we sat here and I was telling you about how the Packer was so aggressive trying to buy those cattle at that 180 to 181 slot, that was really the tell. I thought that they were willing to try to let's buy as many as we're willing to sell them, because we're afraid, we being the Packer, we're afraid that the market was going higher. So it's fun, really fun to see it work. Charts look fantastic here. We're gonna next stop here is to take a run at the highs, and why not? We should be taking out the highs here, in my opinion. I've been talking long-term friendly since you and I have been doing this program, I think. So
let's talk about the macros. What's your takeaway right now?
One, surprised, relieved, happy, whatever. Cattle are notorious, for being afraid of uncertainty, right? We've seen it over and over and over and over again now, and there is a little bit of uncertainty. I'm surprised at, first of all, no reaction to this dock strike, but maybe there's a little bit of a hidden story there too. By the way, you guys realize that we import more beef than we export, right? So maybe the dock strike actually is friendly. Yes, we do export a lot of the high price cuts and do import a lot of the grind, but it is what it is. Secondly, the increased, escalated in a big way, the tensions in the Middle East, that uncertainty could have been bearish, I thought. Politics, certainly, the uncertainty of that deal, I think plays an important role. But through all that, this time the cattle are just like going, I don't care. The cash market's strong and we're going higher. That seems to be the attitude. I think that there's maybe a shift a little bit in some of the, some people call it money flow, or you can call it whatever you want to. But, so if you're a fund manager, do you want to be long a whole bunch of stock market stuff up here with the uncertainty in the economy and all the rest? I mean, there's a reason the interest rates are coming down. It's because the economy slowed up. That's why. Okay. So do we take that money and do we put that in maybe something like hard commodities? They went to the gold too here the last couple of weeks, right? There does seem to be some interest, certainly to shift some of that money flow back to our markets again.
There's a lot that's been factored in, and as I know, harvest continues, and the whole talk of the grain and the marriage that corn has with the feeders, it could be some interesting times and profitable, hopefully, in that point as well.
Well, with high prices, they're coming. There's always challenges. These are different challenges now. How do you maintain the discipline of buying these high price break even? One of the things that I'd mentioned on your program a number of times, I think, was I was worried about cheap feed influence. Cheap feed is not bullish cattle. Right. Never has been, never will be. Okay, so be sensitive to that, guys. Stay current. In the back of my mind, the thing that I was worried about a little, the kind of the gorilla in the closet type of a thing, was I thought, well, what if we get to end of December, for instance, when these yearlings get fat, and those yearlings were high price that we bought early. They were. I mean, I got some. I know I got some cattle that break even above 190, and I think anybody that bought yearlings early, or now for that matter, have the same situation. So what if we're way away from that? What if we're way below that? Are we going to overfeed? Are we going to do what we did in 2015? Take that cheap feed, make them too big, lose all our leverage, and watch that. That's one of the things that we got to get. But with this cash market rolling along here, who knows? We may be at 190 this week already.
We'll take it.
No kidding. If we're up in that territory, that's sure going to alleviate a lot of my worries about whether we're going to get in trouble.
All right, Brad, what's the best way for folks to get a hold of you guys?
Phone number 712-722-0023, or check us out on kkvtrading.com.
All right, Brad Kooima joining us this week. As always, a quick reminder, commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's this week's Cattle Call with a good Viking skull right here on the Rural Radio Network.